You ever look back at a decision and realize it didn't just cost you money? It cost you time, energy, and opportunities you didn't even know you were missing at the time. That's what my biggest investment regret feels like. Not just a bad call, but a slow leak that drained more than I could measure while I was busy convincing myself everything was fine. And the mistake wasn't flashy. It wasn't some dramatic gamble or wild bet. It was something way more common and way more dangerous. I invested in the wrong thing for the wrong reasons and then stayed in it far too long because I didn't want to admit I was wrong. And that combination right there is where most people lose, not at the start, but in the middle when reality starts whispering and your ego tells you to ignore it. I didn't do enough research up front because I trusted hype over fundamentals. I let other people's confidence substitute for my own understanding. And I confused movement with progress, which is one of the easiest traps to fall into. Just because something looks like it's growing doesn't mean it's growing in substantiated or sustainable or meaningful ways. And I learned that the hard way. And the investment itself looked promising on the surface. A strong buzz, people talking about it everywhere, and success stories popping up like popcorn. And I thought I was catching the wave early when in reality, I was showing up late to something that had already peaked in terms of easy gains. And that's another painful lesson. By the time something feels obvious, the biggest opportunity is usually already gone. And that's what's left. It's risk disguised as momentum. I didn't understand the underlying mechanisms or mechanics of what I was putting my money into. I didn't ask the hard questions about how value was actually being created, and I definitely didn't plan an exit strategy, which is wild when you think about it because everyone talks about getting in, but almost nobody talks about getting out. And my mindset at the time was dangerously simple. If it goes up, I win. If it goes down, I wait. That just wait mentality is where things started to spiral because waiting without a plan isn't patience, it's avoidance. As the investment started to stall and then decline, I just kept telling myself it would bounce back. And I doubled down on optimistic narratives. I cherry picked information that confirmed what I wanted to believe. And I ignored everything that contradicted it. And that's confirmation bias and in action. And it will wreck you if you let it unchecked, keep it unchecked. And the real damage wasn't just the loss on paper, it was the opportunity. The cost of having money locked into something that wasn't performing while better opportunities were passing me by. That's something people don't talk about enough. Every dollar stuck in a bad investment is a dollar that can't work for you. Somewhere else, it could have been better. And over time, the stress builds because you're not just watching numbers drop, you're watching your own judgment come into question. And instead of stepping back and reassessing, it's tempting to hold on tighter because selling feels like admitting defeat. But here's the truth, I had to learn the hard way. Taking a loss is not a failure, and refusing to learn from it is. And the longer I held on, the worse the outcome became. And what could have been a small, manageable loss turned into something much more significant simply because I delayed a decision I knew deep down I needed to make. And eventually I pulled the plug. Not because I suddenly became disciplined, but because the situation forced my hand. And that's the worst way to exit any investment. When you don't choose to leave but you have to. Looking back, there are a few key mistakes that stand out clearly now that I couldn't see then, and they're the kind of the mistakes that repeat themselves if you don't actively correct them. First, I didn't define my criteria before investing. I didn't have clear rules for what made something worth putting in money into. So I ended up relying on emotion and external noise instead of a structured progress. And second, I didn't manage risk properly. I put in more than I should have relative to my overall portfolio, which amplified both the financial impact and the emotional pressure. Third, I had no exit plan, no predefined point where I would reassess or cut my losses, which meant every decision was reactive instead of intentional. And fourth, I let ego get involved. I wanted to be right more than I wanted to make good decisions. And that's a subtle but powerful shift that can completely derail your thinking. What's investing is that none of these mistakes are unique, they're incredibly common. And that's exactly why they're so dangerous because they feel normal in the moment. Everyone around you might be doing the same thing, reinforcing the same narratives. And it creates this echo chamber where bad decisions feel justified. Breaking out of that requires a level of self awareness that most people only develop after getting burned at least once. The upside is if there is one, is that this kind of regret can become one of your most valuable learning experiences. And if you actually take the time to analyze it honestly, and for me, it forced a complete shift in how I approached investing. I started focusing on understanding before the action. Meaning, if I can't clearly explain how something works and why it has value, I don't touch it. I began setting strict allocation rules so no single investment can do serious damage to my overall position. I created exit strategies before entering, including both profit targets and loss limits. So decisions are made ahead of time instead in the heat of the moment. I also started paying more attention to opportunity cost, constantly asking not just, is this good, but is this the best use of this money right now? And that one question alone filters out a lot of mediocre decisions. Another major shift was learning to separate identity from my income, meaning whether an investment wins or loses doesn't define me. It's just data, and treating it that way makes it much easier to cut losses and move on without getting emotionally stuck. I also became more skeptical of hype, not in a cynical way though, but in a grounded way where excitement is a signal to slow down, not speed up. When someone feels urgent, that's usually the moment to pause and dig deeper because the real opportunity don't disappear overnight, but bad decisions often happen quickly. And if there's one core lesson from this entire experience, it's that discipline matters more than intelligence in investing. You don't need to be the smartest person in the room. You need to be consistent, patient, and honest with yourself, especially when things aren't going your way. The market doesn't care about your intentions, your hopes, or how much effort you put into the research something. It responds to the reality. And aligning yourself with that reality is the entire game. And my biggest investment regret wasn't just about losing money. It was about learning that I had been approaching the entire progress and the process in a way that left me vulnerable to predictable mistakes. And once you see that clearly, you can't unsee it. That's where growth actually starts, not when everything is going well, but when you're forced to confront the gap in your thinking and decide whether you're going to fix them or repeat them. So if you take anything from this, let it be this. Don't rush into things you don't fully understand. Don't let other people's confidence replace your own due diligence. Always know your exit before you enter, and never underestimate the cost of holding on to something that isn't working just because you don't want to admit it. That combination will save you more money, more time, and more stress than any hot tip ever could, and it turns regret from something that holds you back into something that sharpens how you move forward. If you got something from today's message and you found value to this video, would you please drop a subscription? Without you, I can't grow this channel, and I definitely need the subscriptions to grow the channel because that's what YouTube says I got to do. And comment down below. Love to hear from you. Any positive comments, I'll always try to respond. Negative ones, you'll get blocked. Simple as that. Watch today's video also on the right here. It can also help you on your journey to financial success. Have a good day and take care.